Hi, my name is Callum Kelly, and here is this week's market review. The data, the level, and what's ahead. Monday session. The Nasdaq closed down 0.8%, the S&P 500 down 0.3%, the Dow up 0.3%. The move was concentrated in semiconductors. Micron fell 5.8%, AMD and Broadcom both fell over 2%, the semiconductor ETF, SOX, was down 2.7%. The driver. The US 30-year Treasury yield hit its highest level since 2007 last week. When yield goes up, further company profits are worth less in today's dollars. Semiconductor and AI companies rely heavily on profits that are still years away, so they get hit harder than most. That's why they led Monday's losses. It's also why tech tends to move more than something like consumer staples whenever yields shift. Gold is trading near $4,700 an ounce, up close to 5% over the past week on broad US dollar weakness. Oil is holding in the $85 to $86 range. Normally, gold and yields move in opposite directions, since gold doesn't pay any interest. But this week, a weaker dollar has been the bigger force, which is why gold's climbing even with yields still high. 3 events set the directions from here. Wednesday, 11:30 a.m. Australian Eastern Standard Time, Australian CPI. Forecast is 3.3% year on year, down from 3.8% prior. That's inflation expected to cool off, and it's the main thing the RBA will be looking at for their next rate decision. A number at or below forecast makes it more likely the RBA holds or even cuts rates. A higher number pushes back against that. Wednesday, 10:30 p.m. Australian Eastern Standard Time, US Core PCE, the Fed's go-to inflation number. Forecast is 0.2% month on month, up from 0.1%. It strips out food and energy because those prices bounce around too much month to month, so it gives a cleaner picture of where inflation's actually heading. A print at or below forecast backs up what the market's already expecting, the Fed holding rates steady into September. A higher print means yields could keep climbing. Friday, the Jackson Hole Economic Symposium kicks off, running into the weekend. Fed Chair Kevin Warsh is set to speak. Markets are watching this closely since he's still early in the job. This is the biggest event on the calendar this week. Also, Friday, 10:30 p.m. Australian Eastern Standard Time, Canadian GDP. Forecast at 0.2% month on month, down from 0.3%. 2 things worth zooming in on before we move into the bigger picture for the week. First, macro. Core PCE and Australian CPI are the focus this week. Australian CPI is forecast at 3.3% year on year, down from 3.8% prior. US Core PCE is forecast at 0.2% month on month, up from 0.1% prior. What it means for traders. A soft PCE print keeps the Fed on hold. A hot one reignites yield pressure. If Australian CPI comes in at or below forecast, that strengthens the case for the RBA to hold or even cut rates down the line. Second, the market side. The semiconductor sell-off is what's dragging the Nasdaq lower. Micron fell 5.8%, AMD and Broadcom both fell over 2% on Monday, pulling the semiconductor ETF SOX down 2.7% and taking Nasdaq to a 0.8% loss. Key number to watch, SOX. A break below its recent range would confirm this isn't just a one-day move. Here's the thread tying it all together, bond yields. Wednesday's inflation data and Friday's Jackson Hole speech will both shape where US yields go next, and yields are exactly what hit semiconductors on Monday. That's the one thing to keep an eye on this week. If you're watching yield-sensitive names like tech, this week carries more risk than usual. Sectors less tied to interest rates are less exposed to this specific story. That's the review for this week. Next update once Jackson Hole wraps up. Thank you.